necessarily agreed with.
I
Why
think
is
it's
that?
better. Well, if we raise the minimum wage to $30 an hour, just pick a figure, and it just means that a market system will say a lot of people aren't worth $30 an hour, or maybe it'll say they were not worth 15, or they're not even worth 7, and a quarter. You do not want the market system totally to determine whether you have a decent life in an abundant society. If you had
Just an interpretation. You mean that if we raise the minimum wage to $15, $20, $30 an hour.
The minimum wage doesn't mean anything if you don't have a job.
Right, that the job creation will shut down, that people will lose their jobs as a result.
Absolutely, yeah. And you may have somebody in the room, we probably won't have 7 or 8 kids, but a rich family can have 7 or 8 kids. And if they got a very good business, they may pick out the one that has the most business talent to be in that. And if they've got that one that wants to be a writer, doesn't have to pay well, but they don't mark that kid down to the market system in terms of how they handle finances within the family. But the market system enables us to, have people defending us for peanuts, basically. I mean, it doesn't pay a lot to be a soldier, even if you're working at 120 degrees with a pack on your back and all of that sort of thing. And you can make 100 times that if you can arbitrage bonds or something in New York, just because that's where the money is. We've got the aggregate resources to take care of everybody. And so you don't want the market system to determine what people that are least fitted to the market system make. You want to have an earned income tax credit. You may want to have actual grants. There can be a lot of things you can do.
That's what I would say. Instead of raising minimum wage, you think the answer is to expand the earned income tax credit?
Yeah, and there are people exploring this idea of a minimum, I forget, they've got a term for it that they're using that's become popular in economic circles in the last year or two. It's a basic income or something.
The life income or the basic life income or whatever. Yeah.
I think the earned income tax credit makes lots of sense, but we're spending $60 billion on it a year. And just in this, we're going to wipe out $25 billion a year of receipts if we knock out the estate tax, which is peanuts, to anybody that's involved in a large estate. But nevertheless, there are 2.6 million people die a year in the United States, and there's 5,000 estate tax returns filed. I mean, it only falls on the rich, and yet there's lobbyists. There's plenty of lobbyists working to knock it out. So
As is proposed in the tax legislation that's being crafted right now.
Yeah,
I would increase it.
I would increase it, and I would.
You would increase the estate tax.
Yeah. No, you're going to get the money from somebody. If you look at the last 50 years, the U.S. tax receipts, federal tax receipts, have been between roughly 16% and maybe 21%. And they're 17% roughly now, 17. And they'll be a little less. There'll be a fair amount less if this tax bill goes through. So we are on kind of the low end of where we're getting it. Interestingly enough, the one item that's gone down the most as a percentage of federal receipts is corporate taxes. People tell us it's terrible what's happening and we're not competitive and all that sort of thing because of our tax system. American corporations are doing pretty darn well. We're going to get 18, 19%. We can actually take a deficit of about 2% of GDP, between 2 and 3%. We can take that deficit, and the amount of the national debt as a percentage of GDP will not go up. So Berkshire can borrow way more money now than it could 40 years ago because it has more earning power. The United States has more earning power, way more earning power. And we can take an increasing amount of national debt, but we don't want it to keep increasing as a percentage of GDP. We can have a deficit of 2 to 3% of GDP, and it will remain constant. So I am not afraid of deficits. I am afraid of if they run wild over a period of time. But we can handle, our present deficit's about $700 billion on close to $20 billion. So we're 3.5% now or something like that. That's on the high side. It's going to be a lot higher if the tax bill passes.